A woman inherits exactly $1 million from her grandmother. She's never held more than $8,000 in her bank account in her entire life. Within 18 months, she's completely broke. Not broke like tight on rent. Broke like the money is gone. The new car is repossessed, and she owes more in taxes than she has left to pay them. $1 million vanished, and she can't even fully explain where it went. This isn't rare. Roughly a third of people who receive a sudden windfall, an inheritance, a lawsuit settlement, a lottery win, are broke again within just a few years. The number sounds impossible until you understand exactly how $1 million actually disappears, and more importantly, exactly how it doesn't have to. Here's what happened to her, step by step, because it's almost identical every single time. Week 1. She pays off her car and buys a nicer one. $40,000 gone, but it feels responsible, so nobody questions it. Month 2. She puts a down payment on a bigger house, because obviously a millionaire needs a bigger house. Another $120,000, plus now a mortgage payment that didn't exist before. Month 4. She takes the family on a trip nobody could normally afford. $25,000 for 2 weeks. Then come the loans to family members that everyone quietly understands will never be paid back. $60,000 here, $30,000 there. By month 8, she spent nearly $300,000, and she still has a comfortable feeling cushion in the bank, so nothing feels wrong yet. That's the trap. $1 million feels infinite right up until the moment it isn't. And by the time it isn't, the spending habits are already locked in, the mortgage is already signed, and there's no easy way to reverse course. This pattern is well known among wealth advisors as sudden wealth syndrome. It's the gap between having money and knowing how to think about money. And that gap is exactly what destroys most windfalls. If you've ever daydreamed about what you'd do with $1 million, hit subscribe, because today I'm going to show you the actual smartest way to spend it, the way that makes it grow instead of disappear. My name is Bobby, and here's how the math really works. The core principle that separates people who keep their million from people who lose it is simple. You don't spend a windfall, you restructure your life around it. That means splitting the money into distinct buckets before you touch a single dollar of it emotionally, because money that isn't assigned a job gets spent on whatever feels good in the moment. Think of $1 million like a company's budget, not a personal treat. A company doesn't dump its entire annual revenue into one expense. It allocates funds across departments, protects a reserve, and only spends discretionary money after obligations are covered. Treating a windfall the same way is the single biggest difference between people who turn it into lasting wealth and people who turn it into a cautionary tale. Let's run the actual numbers on the smartest possible split. First, taxes and reserves. Depending on how the money arrives, 20 to 30% may already be owed or should be set aside immediately. So let's reserve $250,000 right off the top, untouched, sitting in a high-yield savings account. That leaves $750,000. Next, the emergency fund and debt payoff. If there's any high-interest debt, credit cards, personal loans, this gets paid off immediately, since eliminating a 20% interest rate is a guaranteed return no investment can match. Let's say $50,000 clears all existing debt. Then, 6 months of full living expenses go into an untouchable emergency fund, another $60,000. That leaves $640,000. Now, the wealth-building core. $450,000 goes into a diversified investment portfolio, low-cost index funds, split between retirement accounts and a standard taxable brokerage account. Historically, the market averages around 7% annual growth after inflation. At that rate, $450,000 left alone for 20 years grows to roughly $1.7 million without adding another dollar to it. That leaves $190,000. This is the only portion that's actually spendable in the traditional sense, and even this gets split. $100,000 towards something that improves daily life long-term, paying down a mortgage, funding education, or starting a business with a real plan. And finally, $90,000, and only $90,000 for pure enjoyment. A nicer car, a trip, whatever actually brings genuine happiness, guilt-free, because it's been deliberately budgeted rather than impulsively spent. Notice what just happened. Instead of $1 million disappearing into undefined spending within 18 months, this version keeps $700,000 actively growing, permanently protects a reserve, eliminates debt, and still allows $90,000 of pure, guilt-free fun. The person who did this doesn't feel poorer than the person who blew it all on a bigger house and a nicer car. They feel richer because their money is still working for them years later. You don't need $1 million windfall for this framework to apply to you. The same percentage-based thinking works whether it's a $5,000 bonus or a $50,000 inheritance. Reserve first, eliminate debt second, invest the majority, and only then allow yourself a clearly defined amount to actually enjoy. The real skill was never earning the $1 million. Plenty of people receive windfalls. The real skill is having a system in place before the money ever arrives, because by the time you're holding it, your emotions are already writing checks your future self can't cash. Speaking of expensive decisions people regret, if you want to see exactly how a $220,000 supercar purchase can secretly cost someone $18,000 a month, click on this video right here.